You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again. It is Thursday. It is 1:30 p.m. Central. It is 2:30 p.m. Eastern. Do you know what's going on in the world of futures options? Well, let's find out together, shall we? It is time for TWIFO, This Week in Futures Options. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which so many of you have been binging these days. Go ahead, binge away. There's more bandwidth where that came from. A great week in the can already. A lot of great content out there. Nice Options Bootcamp 301st episode. Spectacular. Popping off yesterday. That was a fun time. Also, a great pro Q&A with our buddy, Mr. Vixologist. You folks throwing out all of your crazy left field questions about vol and VXX and SVIX and all sorts of fun out there. That was a great time. If you want to check out that and the other, 380 odd episodes waiting on that feed, only one place to go, theoptionsinsider.com/pro. That'll also get you access to options oddities coming up the end of the week. That's been a banger as well. Myself and the Rock Lobster have been up to some fun out there, and it's been an intriguing couple of weeks. Going to pay it all off tomorrow on that show. Again, theoptionsinsider.com/pro is the place to go to learn more. As we learn who's joining us on the old CME Group hot seat today, I am pleased to welcome on a newcomer to the program, and indeed to the network. He is Kevin Green, the senior markets correspondent over there at the Schwab network. So he's jumping networks today. Kevin, welcome to This Week in Futures Options.
Thank you, Mark, for having me.
And Kevin, as we are wont to do with all of our first-timers here on the network, why don't you go ahead and give our audience a bit of an overview of your background in the world of derivatives, as well as what it is you talk about day-to-day over there on the Schwab network.
Yeah, definitely. So I'm a senior markets correspondent with the Schwab network. I actually started at Schwab around 10 years ago. I started off as the derivatives broker for Options Express, which was acquired by Schwab. And at that time, I was obviously helping clients with options trades, futures trades. I also, at that point in time, it was a smaller brokerage house, was a fixed income principal there. So I ran the fixed income desk, short sell desk, the compliance side of it, worked on that as well, helped out with the integration. And then we migrated and did the integration, and then I ran a derivatives team until started to do this role full time for about 2 years now, 2.5 years now. So I mainly talk about everything on the network, honestly, but the biggest passion that I have is obviously on the option side, on the future side, and that's really where I kind of just hone in on pretty much every single day.
All right, then, let's get to it then. Should be a fun one, but it is time to kick things off with the Movers and Shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers report.
All right, everybody, welcome to the Movers and Shakers report, the portion of the show where we break down everything lighting it up to the light side and to the dark side over there at CME Group this week. If you want to follow along, you can see this report. We tweeted out at Options right before showtime. The folks at CME also tweeted out right before showtime. It is, as you might imagine, listeners, given everything that's been going on out there over the last week, heavily biased towards the green. This is probably the most green biased week we've had on the show in quite some time. I would say it's 80, maybe 85% green on our Movers and Shakers report this week, even though our largest percentage mover is to the dark side. We have enough to make a bottom 5, maybe a bottom 10 if we really stretched it, but that's pretty much about it. I'm going to pay all that off in a second here, Kevin, but you mentioned you are the markets correspondent over there at Schwab. It's been obviously a tumultuous couple of weeks, to put it mildly, out there in the broad markets, and certainly from a volatility perspective. So I'd be remiss if I didn't kick things off by just getting your thoughts on the extremely aggressive meltdown we saw a couple of weeks ago, and now the almost as aggressive melt up we've seen as a result, Kevin.
Yeah, this is actually kind of how these things have worked post-COVID, right? We have these really big drawdowns, especially when you're looking at technology and the NDX going into correction territory, and we have just individuals buying the dip. We had that spike in the VIX last week on Monday, and I know everybody and their mother probably has a different reason as to why. My biggest reason for that VIX spike here is, one, we have 24-hour SPX trading at this point in time. It's still very illiquid. So at the time that we saw really the strength in that yen, we also probably had a significant amount of hedging activity that was taking place in just a low liquidity market. We saw the VIX spike up to 65. One of the largest backwardations that we've seen from the VIX and VIX futures as well, that actually hit around 35 for that backwardation. It was the largest one that we've seen since 2008. And then we actually started getting a little bit more commentary coming from the Bank of Japan, trying to ease markets there a little bit. And then once again, kind of having everybody just becoming a little bit more aware when it comes to the carry trade. And throughout that time, we also had some pretty decent economic data for the most part outside of that jobs report. So I think the market has really tried to digest the moves that have happened over last week or 2 weeks. We are still seeing volatility starting to come down here. What I would say is that, the CME has a really good tool, the liquidity tool. You can see the depth of markets for a bunch of different products, and the one that I really follow is the E-mini S&P 500. And throughout that downturn, that pullback, we saw obviously liquidity just dry up across the board. Now you're starting to see that liquidity coming back into the market. And usually when we see liquidity coming into the market, volatility generally, for the most part, actually starts going down there. And that's when we start seeing these, rapid moves to the upside. So I think that's kind of where we're at. I don't think that we're out of the woods yet, but it's a nice little bounce. We got to clear some pretty key levels here to the upside, and a retracement back down, and maybe a 50% retracement is not out of the ordinary for an overall bull market. So that's kind of my thoughts that we are, what we experience and what we might be experiencing over the next couple of weeks.
All right, good stuff. And now let's turn our attention to what's lighting it up over there at CME this week. Like I said, it is light side bias this week, but we can scrape together a dark side. Kevin, as our guest, I will give you pride of place. Where should we begin our journey this week, sir? To the light side or to the dark side?
Let's start with the dark side so we can end up with some positivity.
Not much of it at all. All right, let's see what we can scrape together to the dark side this week, even though we do have one banger, listeners. Number 5 to the dark side, we start in the ags, this time to the soybeans, listeners, off almost 3.5%. Number 4 is oats, off a similar percentage. Soybeans is actually 3.47%, and oats taking it by a hair, off 3.48% this week. So keeping it in the ags. Number 3, we're still saying in the ags, it is soybean oil, off 4.31%. Number 2, we're going off to the energy now. It is RBOB, off 8.59%. So a rough week out there for RBOB. And number 1, we're going from the energy to the rates, in particular 3-month SOFR. Taking on the chin this week, off 26.44%. It was number 2 in the other direction last week, up 4.39%. So intriguing action out there in the rates complex. Maybe we'll get there today. Now we go to the light side, listeners. And again, we could do a light side 30 if we wanted easily. It's a lot of green on the screen out here. We capped it at 5, listeners. Number 5, to the tech land we go. In particular, it's the E-mini NASDAQ, up 5.56%. Again, it shows you what an aggressive week it is. 5.5% is pretty much our cutoff to break into the top 5 this week. So that's an aggressive week to the upside. Number 4, we were just talking about all things Japan. It is the yen-denominated Nikkei, up 5.83%. Number 3, we're going from equities and international equities back to the ags, in particular dairy, with Class 3 milk up a whopping 7.05%. So a banger week for dairy, listeners. Who knew? Number 2, back to equities. It is the tech sector of the S&P 500, up 7.67%. And our number 1 light side mover, no surprise, this thing delivers every week. It is back to energy, listeners. It is nat gas, up 12.04%. It was number 1 in the same direction last week, up 9.81%. So did you have a nat gas rally on the teeth of everything else in your back pocket and on your bingo card this week? If so, listeners, you're having a fun week. But it's actually, before we get to the rest of the fun, let me just break down here these CVOL movers and shakers as well. You can find these for yourselves, listeners. Just type CME and CVOL into your browser of choice. You're going to get that dashboard up there, and then sort it for the high-low range to 1 week, and then go into the ordered list. It's going to order it by today's vol activity, but obviously we're going to pay more attention to the weekly range for the CVOL. And a spoiler alert, as you might guess, all of the CVOL, pretty much across the board, they're all burying the needle to the bottom end of their weekly range. So vol is coming in across the board. We will start in FX land, the FX CVOL at a 7.19 when we kicked off the show, off 0.17, and again on the low end for the week. The high came at 7.41 earlier this week. Below that, we have the Treasury price vol at a 6 3/4, off over half a point, 0.58 to be precise. So coming in aggressively on the Treasury vol front. Again, that is the low for the week. The high was almost 7.5, again set last week. Then below that, we have the Ag Products CVOL at a 20.55. That's off 0.84 today. And again, at the low end for its range for the week, the high was 23.26. So came in quite a bit. And that was set last week. Below that, we have the Aggregate Energy CVOL at a 47.60. That's off a little over a point. Again, at the low end for its range, the high was 51.34 set late last week. Below that, we have the Aggregate Commodities CVOL, 32.65, off 1.09 points just today. Its high for the week was 34.77, again, also at the low end of its weekly range. Below that, we have the Aggregate Metals CVOL, 19.39, off 1.36 points. So vol collapsing in the metals today as well. Again, that is the low end of its weekly range. The high was 21.17 set last week. And at the bottom of our list, we have the Treasury Yield vol, a much bigger number, obviously, listeners. 123.32, off 10 3/4 points just today. So as you can see, yield vol really moves in the treasuries. That is the low print for the week. The high was 136 3/4 set late last week. So man, quite a rocking week out there on the treasury yield vol front. All right, Kevin, that's a lot of table setting, but now we are ready to get rolling. Where should we kick off our show this week? What's catching your eye? You like a little bit of energy? Are you a big ags guy? You want to go to rates? Something else? Where should we start our journey this week?
We could start anywhere that you really want to start. I think really the focus, maybe we want to touch on currencies just maybe a tad bit, right? I mean, it's a dead horse. It has been beaten, but just knowing the fact that volatility when you're looking at the Japanese yen is still for the most part, elevated. It will. It's usually the most elevated currency that's out there. It's usually the most volatile currency that's out there. But there's probably still a little bit of remnants of this carry trade that's going to be working itself out throughout the market. And we continue to see that volatility or that realized vol on that pair. And so, just something to kind of keep your eye out on it. I think it's something that obviously was a huge fear segment, but if you're kind of looking at the exposure, $2.2 trillion of exposure that some have reported, and then also $22 trillion if you're adding derivatives and then offshoots, it seems like being able to reduce or minimize that risk in a matter of 5 trading days, Mark, in my opinion, is not likely. And so we probably will see some fallout here over the next couple of months with earnings announcements that come up, or maybe even other announcements that come out, especially from the Bank of Japan. So keep your eye out on that one. I think that's going to be one that to be talking about here in the next couple of weeks, in my opinion.
All right. Sounds like we should do a little bit of talking about FX. So here we go.
The dollar, the euro, the yen, and more. It's time to explore what's happening in major currency options around the world. It's time to talk FX.
All right, everybody, welcome to the world of FX. Fun couple of weeks. I got to use our FX drop a lot more than we have in, the last couple of years combined. FX, usually one of the sleepier complexes over there at CME. If you want to find this for yourselves, you know where to go, listeners. CMEgroup.com/TWIFO, TWIFO. Once you're there, go into that asset class drop down. You're going to go down about 5 slots to foreign exchange. Then you're going to go to FX majors. And Kevin was just talking about yen USD, so we will start there. That's almost at the bottom of our product list there. And again, these strikes always crack me up whenever we're talking yen USD, listeners. That front future at a whopping 0.0067. 67415 if you want to be precise out there. So gotta like your decimal points if you're slinging a little bit of yen USD out there. And it looks like folks are slinging some this week. Maybe it's come off a little bit after its big volume spike back a week and change ago. We have about 28,000 contracts on the tape this week. So nothing to sneeze at, but also not blowing the doors off out there. And it looks like the largest chunk, a little over 30% of that flow coming in the September contract that has about 22 days to go. So we're going to hang out there. What is the vol, you might be asking, in September FX? And again, FX not known for being a bastion of volatility. I mean, just look at the FX aggregate CVOL we were just talking about, right? It is an aggregate of 7.19. So you're not talking a ton of juice. And the yen USD is no different, about 10.5 at that front month vol there. That's off about 3.5 points this week. So vol obviously coming in quite a bit. But again, we saw the big event risk unfolding recently. So it makes sense that we'd see a lot of that vol coming in right now. In terms of skew, last week, nobody wanted the puts. They were 6.5% cheap. They remain about that same level right now, 7.1% discount. And the calls last week, 10.1% bid. So all of the interest, all of the action was to the calls. This week, 13.8%. So folks loading up on some calls. Let's see if we can go find what the action was out here this week. And it looks like the number one most active contract in yen USD this week, listeners, was again in that SEP expiration cycle. And it was, I said, we're at almost a 0.007 out there in the futures. And that's exactly what was lighting it up. It was the 0.007 calls going up about 1,150 times this week. The banger day was Monday, about 850 of that going up on Monday, all opening there. So a lot of opening paper on Monday. I'm looking to see if any other interesting strikes or rolls that might go with it. And I don't see anything. Looks like it was just a straight up opening paper on Monday, and they continued on Wednesday, about 140 each Wednesday and today. Closing yesterday. Today's paper, we don't know, obviously, against an OI of about 1,700 still on this strike. But given the skew action out there, it looks like folks were opening buyers to the upside out there, which is kind of interesting. Kevin, is this paper flow, does that kind of surprise you? Does it make sense? We're seeing some roughly 22-day, slightly out-of-the-money calls going up in yen USD this week, sir.
Yeah, not surprising at all. And in fact, I mean, if you look at not only just looking at the yen, but also other pairs too. I mean, we're in an environment right now, especially with the Fed probably going to cut rates in September, where from a fundamental catalyst that should actually weaken the dollar. And if we're seeing that type of action, then a lot of these other currencies should actually catch a bid. When you're looking at the yen, they have their own little issue, but also when you're looking at the euro has actually been a silent killer to the upside here today when you're this week, actually, when you're looking at the Euro USD pair. And we have seen the dollar index itself kind of fall to the downside. And I think that's, once again, going to be a narrative that could actually play in the hands of just commodities in general, which is why I thought it would be a good time to actually kind of talk about currencies first, because the weakening dollar can have a massive impact when it comes to commodity export demand, as well as commodity prices, as a lot of these products like grains, or if you're looking at oil, are priced and traded in dollars. And so I think that's something that's, once again, just not surprising to me. And I think this might just be the start of the beginning. I don't think it's going to be a really rapid move to the downside when you're looking at dollar pairs, whether you're looking at the Euro USD, or if you're looking at Japan USD. But I think it will be a gradual move to the downside for this dollar. And if that's going to be the case, once again, that should actually potentially spark a little bit of a bid in commodities, all else being equal, if we do have this soft landing scenario that everybody loves to talk about.
Well, since you invoked Euro USD, let's head there next, listeners. Pop out of Yen USD and go all the way up to the top of that product category, to the big dog in the FX complex. Of course, Euro USD hanging out right now at a 1.099. It's just a tick off 1.1 out there right now, listeners. Up slightly, up about 0.5% on the week. Doing some paper out there, roughly double what we're seeing out there in the Yen USD, about 56, almost 57,000 contracts on the tape out here in the old Euro USD, and a similar time frame, and a similar percentage as well, a little over 30%, about 32% going up in that September time frame. Has about 22 days to go, so we're going to hang out there as well. What is the vol, you might ask, in Euro USD? Well, if you thought Yen USD was explosive vol, allow me to present Euro USD at a whopping 5.25, off almost 1/4 point this week. So again, FX complex, not known for being a bastion of volatility, and that is continuing this week. What little vol there was coming off the board this week. In terms of skew, last week the puts were pretty much flat to the at the money. This week, about 2.7% bid. That may sound like a lot, and it kind of is, but again, you're starting from a baseline of 5.25%. So just bear that in mind. The calls last week, 2.9% rich. This week, flat. So we swung completely from flat puts to almost a 3% bid to the puts. Last week, you had almost a 3% bid to the calls. Now they are pretty much flat as well. So kind of a inversion on the skew front. And leading the dance out here, maybe this is the culprit, it is the 1.8 puts. Remember I said we had almost a 1.1 out there in the SEP future listeners. The 1.8 puts leading the dance pretty much all week long. The big day was Monday. Again, Monday, the banger day in a lot of the FX products out there. 3,200 contracts on the tape, mostly opening there. 1,800 going up on Tuesday. The rest of the week pretty quiet, so it was all Monday and Tuesday. The OI right now about 5,500 on this strike, so it looks like they were pretty much opening on all of it earlier this week. Looks like there could have been a little bit of vertical action on Tuesday. About 1,100 of the 1.085 calls also went up. So it could have been some vertical action opening on both. Not a roll, but intriguing stuff. 1.8 puts. And then behind that, number 2, looks like actually number 2 was the 1.085 puts, doing about 700 contracts on Monday, 1,100, like we said, on Tuesday, 300 Wednesday, and not much at all today. So total of about 2,100, and the OI on that strike about 3,000. So slightly out of the money puts in about 20 days. It sounds familiar here. Kevin, what are your thoughts on some of this paper flow we're seeing out here in good old Euro USD, sir?
Once again, yeah, I think this is a scenario where I think it's just hedge activity, right? And just to be able to try to cover risk outside, just in case that we do have an event or a vol event that does take place. But, the coverage of those particular contracts after we may have a lull in volatility could also, once again, propel prices to the upside. So I think it's just good to see the carnage that's been left, the concerns that have been left. And even though, once again, on a historic basis, or if you're just like looking at the FX fall skew just in general, it's not really that aggressive, but I think it's once again a sign that we want to be able to have a little bit of protection, maybe some upside potential when it comes to the euro currency. And I just once again, I think it's an interesting action in order to try to protect a portfolio, especially if you have international exposure in equities or any type of international exposure when it comes to physical commodities.
It makes a lot of sense as we keep on rolling, listeners. Looking at our movers and shakers this week, we have RBOB at number 2 to the dark side, off about 8.6%, and nat gas taking the pole position to the light side this week, up 12%. So I think we got to make a stop in energy next.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, everybody, to the world of energy we go. Pop out of that FX asset class. You're going to go up 2 slots in the TWIFO report to energy, and then product family going to go down about 3 slots to nat gas. And if you do that right now, you'll see that front future at about a 220. Right now puts it up about 3% just this week. Obviously up more if you go back to the end of our show last week. Also seeing some paper on the tape out there in nat gas. 705,000 contracts on the tape. So not a sleepy week at all. Before I break down some of the action out here, Kevin, is nat gas a product that's on your radar at all? And what are your thoughts on some of this action we're seeing out here of late?
Yeah, definitely always on my radar here. So, from a nat gas standpoint, if you're looking at the fundamentals, it remains to be bearish at this point, right? We're in injection season. We have an abundance of supply here in the United States. We also do not have the expanded capacity for LNG in order to export. So we're pretty much capped out. But one thing about natural gas that we need to be prepared for is going to be September and October months. That's really when we start getting prepared for the draw within inventories. And that's usually when we start seeing a little bit of a bid catching into this contract. And overall, when you're looking at the commitment of traders report, we know a lot of managed money likes to sell against the futures contract because, once again, the dynamics when it comes to the fundamentals are pretty bearish. But this could be an opportunity for natural gas over the next couple of months, 2 months, 3 months, where it does catch a bid. There's also geopolitical risk that is out there, not only just from the Eurozone. Their inventory levels look really good right now, sitting at around 88% for overall storage for the European Union. But you are seeing a little bit of slower flows when it comes to their injections over the last couple of weeks. And so that has actually sparked a little bit of buying interest overseas in their natural gas prices. And that also could be a tailwind for LNG exports and LNG prices here in the United States. So I think we have more opportunity for upside movement than maybe downside potential. We did have that scenario in February where we touched down to $1.52. Are we going to go back there again? Anything is possible, but that's when you're kind of getting to fairly historic levels to the downside here, and having that seasonal event risk that is out there. I think there's probably a little bit more upside potential. So I would just be very, very careful with this contract. It's the Widowmaker, right? It's probably one of the hardest futures contract to really trade because it actually has, for the most part, actually an inverse relationship when it comes to vol. Usually kind of when we see these vol spikes to the upside, that's usually when the contract actually moves to the upside rather than maybe some other traditional contracts where we might have something a little bit different where vol spikes and we actually do see selling and activity because something unforeseen did take place. So understand that inverse relationship, understand the seasonality for this contract, maybe another month, maybe another 2 months of lulls of this range-bound activity, and then kind of look at the expectation of maybe prices advancing, and then also potential disruption of flows between Ukraine and the European Union as Ukraine actually has a little bit of an incursion into Russia. So that's really my thoughts when it comes to natty. Hard trade, but once again, more upside potential over the next couple of months than downside risk.
And nat gas is just a fascinating product to me, Kevin, because A, it delivers on the volume front, and B, it puts the lie to the notion that no one wants to trade an option on a sub 10, let alone a sub $5 underlying, right? I mean, look at it, 700,000 contracts on the tape this week. So folks are slinging options on nat gas, Kevin, even though it's a little north of $2.
Yeah, definitely. I mean, even look at the action today. I mean, we had a 10-cent swing just today alone. I mean, the volatility is definitely there for this product, and it'll be elevated compared to maybe some others within this complex. But just the understanding that vol is usually inverse because of the fundamental gluts that we actually have with supply makes it a little bit difficult for those that are newer to trading this product rather than maybe some others like crude oil or even gasoline.
Yeah, you're right. They do call it the Widowmaker for a reason. We've also seen a lot of people get lured into this product in the last couple of years because of the explosive, pun intended, spike that it had up to the upside, threatening the 9 and 10 handle. And those people have a very skewed frame of reference for nat gas. I think 9 or 10 is a normal range for nat gas. So they've come to nat gas options trading with a little bit of a skewed perspective. So it has been interesting to watch the people out there playing in nat gas, particularly in the last few years. Speaking of playing, let's see what's going on out there this week, listeners. Like I said, about 30% of it going up this week in the October contract. It has about 41 days to go. So we will hang out there. That future a little bit higher at a 233, up about almost 2% on the week, listeners. The vol in October nat gas, a 60.5, so off about 2.5 points, but still fairly frothy. I mean, if you're looking at the rest of the products we're going to break down here at CME, not many are going to be north of a 60. Crypto, a few others spring to mind, but nat gas usually is in the pole position on the vol front, even if it is coming in a little bit this week. Skew-wise, kind of flattening out this week. Last week, the puts were 3.2% bid. This week, they've been cut in half, 1.7% bid. The calls last week were mostly flat. This week, almost 2% discount. So got an almost 2% bid to the puts, about 2% discount to the calls. That's not much. That's pretty mild. So maybe showing the options, at least for the near term, are not singling a banger move in any direction, unless you look at the most active contracts. Then we have pretty far out of the money puts taking the top spot this week. It's the 1.5 puts going up 37,000 times in October this week. So that's a lot of paper. You might be saying, what are people doing out there? But it looks like folks were taking them off, listeners, which does make some sense as we're moving away from that strike. We have the big day was yesterday, 14,500 going up yesterday, mostly closing there. About 9,000 today against an OI of 56,000. So still size OI left on the strike. 7,000 on Tuesday, mostly closing there, and 6,600 on Monday, slightly opening. So looks like folks were bailing on their 1.5 puts. Looks like we could have had some vertical action. About 7,000 of the 1 3/4 puts also traded on Tuesday. So it's like somebody might have been rolling up to a little bit tighter protection. The rest of the week, it doesn't really line up that way. So it looks like if there was a big roll day, it was Tuesday, even though our number 2 most active contracts, the 1 3/4 puts, also in October. Again, the big day was Tuesday. Looks like where that roll went up. The rest of the week, 5,400 today against an OI of about 47,000 exactly, and about 4,000 each Monday and Tuesday, closing on Monday, opening on Wednesday. So again, the volume's kind of all over the place. Doesn't line up like folks were aggressively rolling from the 1.5s up to the 1 3/4. And right behind it, almost 21,000 as well of the 2 puts. So look, maybe some folks were rolling. Looks like there could have been a roll today because about 9,000 each of the 1.5 puts and the 2 puts trading today. I can certainly see if you are going to bother to roll, going up to the 2 strike as opposed to the 1 3/4 puts, getting a little bit tighter, more relevant protection. The rest of the week, we had 5,300 on Monday. Looks like actually closing there, which is kind of interesting. About 3,700 on Wednesday and about 2,700 on Tuesday. Opening on Wednesday, closing on Tuesday. So again, the volume kind of all over the place. Let's just scroll really quickly. There's always some interesting and or aberrant prints before we move on out of energy. Hope you like yourself some 4 calls, listeners. They were trading in April 2025, 4 calls going up 7,000 times this week. That's an interesting one. And then if that doesn't do it for you, listen, how about these 6 calls in August of next year? So we got some upside strikes afoot. Maybe some interesting upside strikes, but upside nonetheless. Kevin, we could probably talk a lot more about energy, but we want to squeeze in a few other complexes. So what else is floating your boat? What other complexes do you want to hit next, sir?
We can hit grains. Let's talk about grains.
All right. To the world of ags we go, listeners.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, listeners, go back to that TWIFO report. Pop out of energy, go up 2 slots to the top of the asset class list to ags. Then they go in product family to grains and oilseeds. Then from there, it's pick our poison. We have a lot of ags lighting it up this week, including soybeans at number 5 to the dark side, oats at number 4, and soybean oil number 3. We also have, weirdly enough, class 3 milk popping hard, number 3 to the light side out there. So a lot of ags. Which ags do you want to focus on first here, Kevin?
Let's talk about corn. That's an interesting spot because we have a situation where obviously production levels continue to increase and exceeding the USDA's expectations here. Now, we did have some weather issues, so we might be pulling back when it comes to the amount of harvested acreage, but we still should have enough supply out there for ending stocks for the new crop, and we still have a fair amount of inventory for old crop right now. One thing to just note when I'm keeping my eye out on corn right now is because of the price action that we've seen. I mean, it's just been heavy selling for the last 2 years, 3 years. We continue to move to the downside here. Now, we had that spike because of supply chain issues with the Russia-Ukraine war, but we're getting a little bit closer to some, I would say, some lows that we need to be mindful of, especially if you're looking in 2020, getting to around a 301, 300 cent space here. It's a little bit more room to go, but I think there's a little bit more optimism as we get into harvest that we might have something that does go wrong. La Nina should be hitting us, and we've been expecting La Nina since March and April of this year. But the expectation is that could actually hit in late September, early October, which would be around harvesting time. And if that's going to be the case, we have excessive moisture hitting those crops that could also damage those crops or even delay harvesting, and also could impact the amount of harvest there. So I think there's a little bit of optimism that maybe we do see a little bit of a move back to the downside. And then as we get towards October, we might see some price advancing going for corn. And go back to that the FX conversation too. As that dollar weakens, export demand should also start to increase, because if you're looking at the prices compared to the U.S. prices compared to Argentina or even Brazil, we're actually trading for the most part at parity. And if that's going to be the case with higher quality corn and higher quality grain just in general, you would think that maybe China would step in and start buying a little bit more, which could increase obviously demand, and that could also increase prices. So this is the one where I'm looking at it from a technical standpoint as well as from a fundamental standpoint, that we might have, once again, a little bit of more room to the downside, maybe 20, maybe 30 more points. But the upside potential and the situation that we have with money managers really significantly shorting this position, an upside squeeze could take place given the right environment.
Now let's check out what is popping off out there right now in corn, listeners. At a 375 in that front future, kind of unched on the week, only off about 0.5%. So not a huge mover this week, but volume-wise, putting up some numbers. Over 400,000, actually closing in on 500,000 contracts right now in corn. So it's a pretty heavy week for corn. It looks like about 35% of that going up in the Dees contract. It has 99 days to go. One of the things I love about the Ags listeners is they give us a nice respite from the onslaught of all things 0 day. Ags rules of engagement a little bit different. Folks like to play a little bit longer term, like in Dees right now. That Dees future a little bit higher as well, obviously 396 3/4. That future actually up about 2 points, about 0.5% this week. So interesting kind of treading water week out there, at least for right now. In terms of vol, where are we hanging out in a Dees corn, listeners? At about a 22.20, up about a little over 0.5 point, about 0.6 of a point. So getting a little bit frothy. If you go farther out, that vol comes into the latter portion of this year and beyond. And then also the nearer dated contract stuff going away in about a week or two. That's all at about a 24 vol. So interesting, the vol dynamics out here in corn. In terms of skew, last week there was a heck of a bid for the calls, a nearly 15% premium. So folks are piling into some calls. This week that is all gone, 2.2%. So calls are pretty much flat. And then the puts last week, 1.2% bid, so pretty much flat. And then now this week they have swung slightly to the dark side, 2.1% discount there. So this week the skew was lining up mostly flat. Last week, though, we had a heck of a bid to the calls. Let's see if we can figure out what was going on out there. It looks like it was the Dees 4/2s, the 450s, lighting up the tape. So we're a little bit shy of 400. You have the 4/2s in December on your bingo card, listeners. Looks like somebody did to the tune of 23, almost 24,000 contracts this week. The big day was actually Monday, 10, almost 11,000 contracts going up. It looks like folks are mostly bailing on these. In fact, they were bailing on Wednesday as well, almost 8,000. So that makes some sense as we're pretty far away from that strike. Maybe taking those off and readjusting to, dare I say it, a more relevant strike. 4,200 on the tape today against an OI of about 26,000. And not much on Tuesday, only about 1,000 going up on Tuesday. All right, behind it we have the Dees 430. So if you wanted a little bit closer to the fire strike, here you go. 430 calls going up 18, almost 19,000 times this week. The big day was Monday, almost 5,000 contracts on Monday, mostly opening there. 3,800 going up today against an OI of about 17,000. And actually, I take it back. The big day was Wednesday, 9,000 on Wednesday. So That lines up pretty close to the 4.5, so we could have had a bit of a roll down of about 8,000 of the 4.5s down to about 9,000 of the 4.30s, which again makes some sense. If you're looking for some upside, maybe you want to take advantage of the opportunity to roll down to a closer to the money strike. Only about 1,100 going up on Tuesday out there. And if you want some put action, how about the 380 puts? So we're kind of all over the place in December right here this week, listeners. 15, almost 16,000 of those going up this week. Again, the big day was Monday. 8,300 on Monday, mostly opening. So folks piling into their 380 puts in December on Monday. About 3,000 on Tuesday, also opening. 2,000 on Wednesday, taking some off, looks like. And 2,100 today against an OI of 26,000. So paper kind of all over the place in December this week, which makes it kind of fascinating. If you want to get a little bit near dated, we also have the 370 puts going out in about 8 days, doing about 15,000 contracts. Those are pretty close to the fire because of that futures at about a 375, listener. So 5 handle out of the money puts also trading pretty actively this week, about 15, almost 16,000 times. So corn delivering near dated and a little bit longer term paper. We're kind of coming up against it, Kevin, so we got time to probably squeeze in one more complex. Where should we end our journey this week, sir?
Let's do metals.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
A lot of action here today in the metals complex, just in general. I think, obviously, this soft landing narrative saw a little bit of a pullback when it came to gold, but actually a nice little rebound now that I'm checking it out. I mean, it's been very volatile today. And then also looking at silver and copper, the copper complex, we did see a nice little sell-off from the highs. A little bit of concern when it comes to supply, obviously, with copper ore. And there does appear to be a little bit of a dispute for a pretty significant mining company that could also have an issue when it comes to trying to bring copper ore to the market. That's going to be BHP. It seems like there's a labor dispute that's taking place there. And so right now, I mean, if you have the soft landing narrative, if you do have the nice economic data coming out of China, which has been lackluster to say the least, but if we do see some strength within the East Asia markets, I think that could also provide a little bit of a bid when it comes to copper. Now, that wouldn't be good for the inflationary narrative, but once again, I mean, you're trying to play for global expansion, even if we might see a little bit of a slowing here in the United States.
All right, a lot going on in the metals, as you mentioned, both in copper and in gold this week. We'll start in the big dog, which is gold. Go into that drop-down, listeners. Pop out of ags. Go all the way to the bottom of that asset class list to metals. Then we're going to hang out in precious first and click on the big dog, which is gold. Looking pretty big this week from a price and from a volume perspective. Gold front future 24.73, up nearly 23 handles, or almost a full percent. And volume-wise, 303,000 contracts on the tape. So that's a pretty hefty week for gold. And in terms of the action, it's gold, so it's going to be biased to the upside, and it's going to be a little bit longer term. And that seems to be what the case is. About 29, almost 30% of the paper going up in the October contract that has about 41 days to go. What is the vol out there, you might be wondering? Gold isn't that juicy. It's actually at a 16.16. That's not nothing for gold, vol-wise out there. It's not the highest it's been, but it's certainly not the lowest either. Skew-wise, it's bid to the calls. The question is always how much. Last week, the calls were 6.2% bid. This week, 6.8% bid. And the puts, 3.8% cheap last week. This week, nearly 5% cheap. So puts getting cheaper, calls getting slightly more bid out there. That sounds like the precious metal we know and love. And the big dog out here this week was actually not as big as you might think. Looks like the paper was pretty evenly spread out this week. The leader out here was the 2,600 calls in October, going up 14,500 times. Again, we're in that future 24.73. So 2,600 is decently out of the money, but it looks like folks were bailing on these. The big day was Wednesday, 5,300 on Wednesday. Slightly opening there, 3,800 each Monday and Tuesday. Looks like mostly closing there, and about 1,800 today against the remaining OI of only 6,500. So folks are getting the heck out of Dodge on these 2,600 calls, and maybe they're rolling down because the 2,500s came in pretty actively as well. No, looks like those are closing as well. 4,300 of the 2,500 calls going up on Wednesday, mostly closing. 3,000 on Monday, closing as well. 1,800 on Tuesday, also closing, and about 1,000 today against an OI of 9,000. So it looks like folks are just kind of bailing on some upside. I mean, some of that does make some sense. We had a little bit of a pop, so maybe taking some of the upside off the top while the getting is good. But either way, folks looks like they're closing out here in some upside in gold. Let's just scroll really quickly here. Listen to see if we see any other interesting and or aberrant prints, because we are coming up against it here. How about a little bit closer to home? 12 days to go. We've got the September 25 half calls going up about 6,200 times this week. So that's a little bit closer to the fire. Again, we're at about 24.73 in that future, so almost 75 handles out of the money. And if we go a little bit farther out to December, the 2700s, we're trading about 10,000 times this week. So that sounds a little bit more like the gold we know and love, longer term and upside. And then if we go, it looks like that's about the most optimistic strike I see on the board here for this week. Kevin, as I mentioned, we're kind of coming up against it here on the show. But before we get out of here for this week, I'm curious, when you're not talking to me, you're out there talking to the folks on the Schwab network all the time. Obviously, equities are probably pretty hot for a lot of people right now, but you specialize on the futures and futures options front. Which other products are really hot for the listeners? Which one are they hitting you up for right now?
It's always equity options too, right? That is an area, especially with zero data expiration, that has been capturing a lot of viewers' attention. And actually, when you're kind of looking at it, especially for zero data expiration index options, those flows have not only just been adopted by the retail traders, but also institutional flows, where it's 60, almost even 65% of the total volume if we have a pretty decent day. And so those flows could actually have an impact when it comes to market positioning in some respects, right? The equities are always going to lead. But you always can also look at some of those flows going into those index options to try to identify levels either to the upside or downside. And so that's really been capturing a lot of the attention. I actually run a segment that goes over that on a day-by-day basis going into the close, which I'm going to do here in a couple of minutes. And so I think that's been a really key area for people. And then we have obviously earnings season. That's pretty much ending up. And we have NVIDIA earnings next week. Jackson Hole or NVIDIA earnings next week, and the week after we have Jackson Hole next week. So there's a lot that's on the radar there. But looking at those short-term options, as you kind of talked about, that's really been getting the speculators' interest as of late, and it's been hot when it comes to the content.
Yeah, it has been fascinating to watch that evolution on the near-dated portion, particularly on the equity side. If you had told me a couple of years ago when these products first launched that over half of the S&P 500 flow would be in products that expire in a day, I would say you're a crazy person, but that's where we are. And as you mentioned, that's not just mom and pop retail. That's huge funds doing this too. So this really has changed the game for the way people approach equity options out there, which is certainly fascinating stuff. Unfortunately, Kevin, that music means we've come to the end of our journey this week. As you mentioned, you've got a report coming up at the end of the day today. If folks want to check out all that content you're putting out, where should they go? What should they do?
Yeah, they can check out the Schwab Network, where you can watch us and stream us on YouTube. We are on the Amazon News app. There's a whole bunch of different distributions. You can go to schwabnetwork.com, but we're streaming 24 hours a day, 7 days a week. Do love the support and the shout out there. And if you enjoy it, by all means, subscribe to that YouTube link, and we'll be able to continue to crank out content. And Mark, I really do appreciate you having me on here today. This was a lot of fun.
It was a fun conversation. We'll have to do it again. In the meantime, listeners, you can check them out. You know where to find Schwab, not that hard, listeners, and Kevin's content over there. And you know where to go, of course, to check out all these reports we're talking about throughout the show. CMEgroup.com/TWIFO. TWIFO is the place to go to kick the tires and light the fires. Those are running all week long, so if you want to get an update on Class 3 milk at 2 a.m. on a Sunday, no one's going to judge you. Just run the report for yourselves and have a good time out there. That's going to do it for us on the network today. Back again tomorrow, noon Central, 1 p.m. Eastern, to talk all things vol. Who's going to join us on the show? You got to tune in to find out. And then after that, one final time, exclusively for our pro folks, we'll be back to break down the week's worth of unusual activity and all the crazy trades we've been putting on this week. That should be a fun one. It's been a bit of a active, bit of a banger week out there, listeners. So that should be a fun one on options oddities. You know where to go if you want to find all that goodness, and of course the great pro Q&A. We did this earlier this week with our buddy Mr. Vixologist. Only one place to go to find all that and about 350 other episodes. TheOptionsInsider.com/pro is the place to go to learn more. Gotta get out of here today. Back again, like we said, tomorrow. Then we're back again on Monday for the option block, all the way through to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.